Hey Ben.
What's up, buddy?
Hey man, how are you?
Just living it up.
Good. How's your week been so far?
Really good. Busy. I feel like I always say I'm busy, but this week's been really busy. So,
Good. Have you had a lot of applications this week?
yeah, and just people go under contract. I feel like it's just so much easier for people to go under contract now. It's crazy. Like, I mean, they're actually putting in one offer and it's getting
Yeah,
accepted. And
that's good.
you might even get some closing costs paid.
Yeah.
So, it's just like the tide has turned.
hmm Very
So,
quickly,
man, that
very
was like
rapidly,
that was
which
like
is
I feel like that was like a 2 month deal.
it was quick. I mean, I'm seeing, on my end, some contracts terminating. And this is like investors who are I had that happen last week where they terminated. Well, they didn't exactly terminate, but they gave us like ridiculous after due diligence or at the end, they gave us like ridiculous requests, which part of that was to bring the purchase price down 15,000. And I think that it was just kind of another investment company that I spoke to, a representative said a lot of the investment companies are doing that right now because everything has changed so quickly that they're having to like go back in and reevaluate their numbers on the offers and change it. It's not to say that people aren't still buying houses, because they are, and
Yeah.
investment companies are buying houses, but we'll go back and look at we'll look at the numbers today and see what July looked like.
I
Dude,
mean,
it's crazy. Have you looked at it already?
no, I haven't. I don't have. I wish I had access to MLS. Maybe I need to talk to my wife.
Yeah, you're married to someone who does.
Maybe I need to talk to my wife so I can start pulling it up. But I tell you what, mortgage rates have done a great job this week. Like,
Really?
yeah, there's been a few instances like we're locking people in the high fours on a conventional deal.
Well, there you go. That's
So
all.
even like, let's say high fours to low fives. That's
Mhm.
a great range. I mean, that's really good.
Yeah.
So we had a little bit of a spike earlier in the week. Just people that are part of the Federal Reserve started opening their mouth about liquidity and all this other fun stuff. So we had like a 2 day stint where the 10-year did kind of shoot back up, but as of right now, it's doing really well.
Well, good. Good. We need to do another episode just on that. Go through different pieces of it and how the 10-year Treasury affects those mortgage rates. But today we're talking about the July recap. So July or August market update, which is going back and looking at what happened in July. And we had some big changes from July to August. We did in the real estate market. And so, we'll just go ahead and jump right into that stuff and we can kind of talk about it.
What was the monthly inventory at the end of July or end of June? Was it 1.8?
Yeah, it was 1.8. Yeah. So this did this last time that I was doing it. For some reason, it shrunk this down. Oh, we got some thunder going on. So this is like the first part, which is kind of like, man, are we already like kind of going, our price is actually going to go down from June to July. Median sale price through the whole MLS went from 400,000 to 390. But there's a couple things we can look at on that. One of those is the same exact thing happened last year. So from right here, from July to August, 340 to 335. So let's go back and look at that it went up the year before. It went up in 2020, but 2020 was a different animal. If you look at July to August 19, it went down 259 to 250. That's crazy. Just 3 years ago, the median sale price for the whole FMLS was 250, and today it's 390. It's nuts. But yeah, so that seems to be a trend, except for in 2020, which I said was, a different animal, but the same exact thing happened. So though this might look like, whoa, the prices are starting to go down, that seems to be the case from June to July every year. Oh, I was
And
looking at July.
this is just what the median home prices are being priced at to sell.
Well, no, this is the sales price. This is what they're selling for.
Yeah.
So this is at once they've sold, and it's so then the next thing is you asked about months of supply, and I wish this wasn't doing this. I don't know why it's doing this thing right here because you can't really see it that well. But at the end of June, we were at 1.8 months. Now we're at 2 months of inventory. 2 days ago when I looked.
Didn't we start this thing at 1.4? Didn't we start this?
Yeah, it was.
It was at 1.4.
Yeah, 1.4. Yeah, and now 1.8, 2 months of inventory. A couple days when I looked at that, it was 2.1 months of inventory. The other thing, so I'll go back to some of those other things in a minute, but this is crazy too. Like, and if this was stretched out, you could really see it, but like pending sales just took a nosedive. So did closed sales that's a crazy, a dip right there. The other thing that dipped is new listings. So new listings went down significantly from June to July. Pending sales went down significantly from June to July, and closed sales went down. But then months of supply, so inventory, went up. So what that tells me is what we've been saying, for the last 2 or 3 months is the homes that are on the market are sitting on the market longer. So though we have less listings coming onto the market, whatever's coming on is just adding to what's already there. So homes are selling for sure. Let's see, shows to pending. Days on market. Let's look at days on market. So days on market from June to July, at median days on market went up by 1 day. So it's not like homes are sitting on the market for 20 or 30 days, or most of them aren't, but they are sitting there longer, and because they're sitting there longer, inventory is going up while pending sales and closed sales are going down. Even though sale price slightly went down a little bit, what was interesting is inventory went up while new listings went way down, and closed and pending sales went way down. So homes are starting to sit on the market longer. A lot of what came up in May and June is still sitting on the market, which is why it's important right now. I mean, we're seeing inventory come up, raise like that, which means that sellers need to be prepared to compete in the market. And I said that before, but they really do need to be ready to compete in this market. Sure. Because homes are sitting there. But then once again, remember that that same thing happened from June to July. And I noticed that every single year. People a lot of times think that June and July or summer months are busy selling months. I mean, people that aren't in the industry, that those are busy selling months. But for me and for a lot of other agents, those summer months, June and July, are some of my slowest months every single year. People are on vacation. They're thinking about, even though it is prime time to be getting into, the house you want to get into before school starts or things like that. Most people want to get that out of the way in the spring so they can have summer in their new home. And June and July are vacation months. This is the first time in 2 years when the market is actually changing.
I know.
I mean, we went 2.5 years just about where all we were telling people was, well, the price, like everything's still going up, inventory's still going down. Now it's actually changing, and so we can really keep people updated minute by minute on what's going on. Because speaking of what you just said about it always being buying season, always being selling season, we didn't leave that selling market for 2.5 years. It did, it wasn't like everything kind of cooled off. It just stayed going up and up. And now we're at a point where it's starting to level off again. People are still buying and selling for sure. It's just, it's slowed down, and the interest rates have had some to do with that. But I think also there's not this like frenzied feeling of like needing to buy a house. Well, I think that did have a lot to do with the interest rates, right? A lot of, for a while there, people were like, we got to get these rates, which was a good idea.
Great. Yes. And, and just straight up affordability. You got to think that, we have affordability issue that needs to be addressed, I mean, literally, if you read some of the articles and, look at people's financials like I do every day, like if you're not making, I hate to say it, like if you're not making $100,000, like it's really hard. And I shouldn't say that, but like, it is so hard to afford the house that you need or want on where we're at currently. And so that's where it's like, man, I don't know. I just wish we could get some affordability, and it could be the interest rates. I think a lot of it does have to do with interest rates just because of that monthly payment. Look, the monthly payment went up $300 overnight, it's just
right.
Like, yeah.
No, yeah, I agree with you. There is an affordability problem. When you're, I have very well qualified, or some very well qualified buyers who are having a difficult time finding a home in the 325, 350 range in Marietta, so that's, and this is not. Several years ago, you could have found a house for $250,000 in 2019, 2020 in Marietta. That would have been no problem, and you probably wouldn't have had to compete for it as much as you have had to recently. And so that's just driven up those prices. So yeah, we definitely do. But if we can get some more inventory on the market, that'll take care of that. It was just going to take some time for the inventory to build back up.
Yeah,
we need a lot more new homes. As most people locked into those, or not most people, a lot of homeowners locked into those 2 3/4 interest rates, and they're not going anywhere.
Heck no, why would you? I bought in 2021, and my rate starts in the 2s, and I don't want to go anywhere. Why do I want to go from 2.5 to 5.5?
Right. Where are you gonna? You're not gonna sell and buy. Maybe you get to a point where you have enough equity or enough savings that you can hold on to that rate and buy something else, maybe, and you're comfortable with that. But you're probably gonna, if you refinanced in 2020 or 2021, you're probably gonna stay where you are for a while. Until they get this inflation under control. But then again, nothing's promised either, right? So like, we can sit here and say, oh yeah, rates are going to come down in 12 to 18 months. Are they? What's it going to take to get rates back down into the low 3s, high 2s, as we talked about a couple weeks ago? Like, what you saw then it was all artificial, and now we're paying the price now, right? Because the Fed was printing money, the Fed was buying so much mortgage-backed securities that it kept everybody afloat for those 2 years. But look at it now. Like, we are fighting inflation that's not really going anywhere. I really don't think the Federal Reserve knows what they're doing. Neither do I. So I'm not putting them down. But what's it going to take to get inflation under control? They can keep on raising this, the Fed fund rate, which we've talked about. But mortgage rates have, of course, gone down, which they're not tied together. We've talked about that. But inflation still continues to go up, right? So even if it's only 0.1 a month on the CPI and all this other stuff, it hasn't done anything. Anyway, that's it, man. All right, man. Well, I appreciate it. If anybody has any questions, somebody's watching right now. If you have any questions about anything we went over on the market update, let me know. I'm going to send this video out with some of the market stats next week in my weekly email, so you'll get that. Any other questions, feel free to comment here. If you comment, I'll see it on my social media and I'll respond.
Cool.
All right. Have a good one, man.
I appreciate you, buddy.
Later, man. Bye.